You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, that music means it's time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding Options Insider Radio Network. Lots of good stuff coming down that network, some new shows included. If you guys haven't had a chance to check them out, how can you do that? Well, no shortage of ways for you to do so. Wherever you find this program, you can, of course, find the new editions, including the mothership, theoptionsinsider.com. That's where all of our content flows from. You can find all of the programs on our network, as well as all of our content, unusual activity, analysis, education, breaking news from the world of options, all that fun stuff. Surf on over to the mothership if you haven't done so in a while and check it out. You can find, of course, all of the programs there, as well as iTunes, Stitcher, AHA Mobile, and indeed our mobile app, available for iOS, Android, and the Fire OS. You can use that to instantly stream pretty much any episode we have of any show you want to stream. You can also download them. And while you're listening, you say, hey, I have a question about what they're talking about, or I'm not sure, I don't really understand what they're saying, or I disagree, whatever the case may be. Shoot us a tweet, shoot us an email, shoot us a Facebook question, even leave us a voicemail, all baked right into the app there. Really cool stuff. Check it out. The Options Insider Radio Network mobile app, available for iOS, Android, and the Fire OS. All right, and joining me on the old program today, starting off with the man of many hats, the fanciest of all fancy fellows here on the old panel, Mr. Alex Jacobson, a.k.a. the Viceroy from Options Express by Charles Schwab. Mr. Viceroy, welcome back to the program, sir.
Good to be here today, Mark, and a lot to talk about.
Yeah, a few things to chat about today, which is always nice. We are also joined by the ever-lovable, ever-exciting, ever-ecstatic, particularly after this weekend, Uncle Mike Tusaw from RCM Wealth Advisors, RCM Asset Management. Uncle Mike, welcome back to the show, sir.
Oh, very happy to be here if anyone from Chicago is still speaking with me.
All right, and last but certainly not least, we are also joined by the man usually beaming in from the great state of Maine. Today, he's beaming in from a town you may have heard of called Chicago. He's actually beaming in local, but he's not in studio, listeners. He's down the street over there at the Option Pit World HQ. He is the Rock Lobster himself, Mr. Andrew Giovinazzi. Mr. G, welcome back to the program, sir.
Hey, this is Andrew from Option Pit.
All right, thank you for that, Mr. Andrew. As you can see, listeners, we're having a few technical difficulties working out Andrew. He's so used to beaming in from far away, he can't handle beaming in so close. So we're working on that, I should say, with him. We'll get that sorted out soon. But now it's time to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the program where we break down what we're watching, what was catching our eye in the broad markets today. And as Alex alluded to at the top of the show, it was actually a few things kicking on the old street today. It wasn't the most active day we've seen recently, not by a long shot, but there were a few developments to discuss, including on the major indices. S&P closing down a little bit on the day, down about a third of a percentage point to 2002. We stay glued. We stay just glued right to that 2000 handle. Can't seem to really move too far in either direction. Once we do, just retrace right back. So that 2000 psychological level, people always say it's important psychologically, blah, blah, blah. And usually that's the case for a little while. You see a little bit of sticking, a little cluster of orders around that level, but then we break through to one direction or the other and we move. This apparently right now these days, that is not the case. There is glue on that strike, and we shall not break free of it anytime soon. The Dow down fractionally as well, down about 1/10 of a percentage point to 17,119. The Q is actually up a little bit on the day, up about 1/4 of a percentage point, and the VIX cash ticking up a little bit today as well, up about 1/2 point to 12.64. So let's start with the Viceroy. Mr. Viceroy, what caught your eye? What was kicking? What was catching your attention over there in the land known as OX by Charles Schwab?
So there were a couple themes today, and to your point, Mark, the fact that we don't seem to really go through this 2000 level seems to have tempered index trading a little bit. Today it was stock names, and the Apple folks still seem to be a bit stunned. Wasn't a lot of Apple activity today. By the way, when I say that, doesn't mean it wasn't probably the most actively traded issue, but it didn't have the swiftness that it's had for a while. Big name today was GoPro. There seems to be just no stopping that thing. And not only was it active, but there was a lot of chatter in OX social about, disbelief about its market cap. There's a lot of that going on in the tech names lately. But the Apple people still a little bit to the sidelines. Amazon a little bit to the sidelines. Netflix, a little bit of trade lift today in Netflix, but GoPro seemed to be the hot name today.
All right, and Mr. Rock Lobster, I know you just schlepped all the way across the country, but you're that devoted to the Option Block listeners that you have to tune in and give them your little bit of what for. I'm not sure what you were able to watch on your myriad planes and excursions, planes, trains, and automobiles today, but what, if anything, caught your eye in today's activity?
The biggest one was Yahoo. Yahoo with crazy, implied volatility. I can't remember the last time it's been this high, and basically the more the BABA valuation goes higher, the more you get Yahoo for free. So I think it's quite a frenzy of option buying in Yahoo, for sure. That was, I think, the most action I saw of anything.
Yeah, for a company that's been struggling for pretty much the better part of the last decade, they made one smart decision, and that was getting a piece of this Alibaba, because this is pretty much carrying them through all of their other issues and problems. Are we a search company? Are we an online content company? We're hiring Katie Couric. We're doing all this other nonsense. They can't really seem to make heads nor tails of what they are, but doesn't matter, because Alibaba is going to carry the day for them and make all their other perhaps less than salient decisions look great in hindsight, because they have all this Alibaba money coming their way. All right, speaking of all that money, Uncle Mike Tusaw is also joining us on the program today. Man, just loaded with money. Lots of other people's money, actually, that he takes care of on a daily basis. Uncle Mike, what caught your eye in today's activity?
One of the things that I typically follow is kind of a dull day, I should say, for relatively speaking. I know the S&P is down 6 points on the day, and it's less than 1/3 of a percent when you add that up. The thing that's kind of been catching my eye the last couple days, and I guess maybe I'm hanging out with Alex a lot, is still these bonds. I'm just looking at TLT, gapped up a little bit this morning, and then it continued to come down. Buyers did not continue to stay in it. So main thing of the things with which I watch, TLT, the fact that it's still kind of just hanging around the upper 115 level. And I think that just from a charting standpoint and looking at it, I think that we could have a little bit more downward movement. But with the events of this week coming up, I could be blatantly wrong. So I'm excited about the coming week, that's for sure.
Alex has a bit of that infectious property to him, doesn't he? The longer he's on the show, the more people are suddenly diehard macro people and they're looking at the bonds and TLT and everything else. He's infectious that way. I've noticed that myself. I start watching that a lot more than I ever did before. So I wave my finger and I blame Alex for that.
And I'm wearing hats more often now too.
Well, you always were a bit of a fashion-forward fellow, so you're bringing the hat craze back. I think the fedora, quite frankly, could use a bit of a comeback.
I think it could. Like my wife says, I have great fashion sense for being on radio.
There we go. See? It all works out well in the end.
He dresses for radio well.
I like it. All right, and with the trading block pretty much, for the most part, underway, we have some fun issues with the Skype gods today, listeners, but it all seems to be working out in the end, and now it's time for us to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time once again for the Odd Block, the portion of the show we may want to hide the children and say, don't listen to this part of the show because we get into some of the dicier, the shady sides of the options business, the options market, the options activity, if you will. Going to kick things off with a name we've discussed once or twice on the show in the past, including not too long ago. This would be Valero Energy Corp, ticker symbol VLO. This is the name that closed today, $53.52, up about 51 cents. So it was trading right around 53 on the open today, up about 1% now. And this is a name that does about 24,000 contracts on a given day. So a fairly robust name from an odd block perspective. You know, we usually talk about names 200 contracts a day. So 24,000 is a meaningful name from an odd block volume perspective. Doing about 29, nearly 30,000 contracts today. So not a bad day at all from a overall volume perspective. And what caught our eye here in good old VLO was activity out in the OK expiration cycle, in particular the OK 50s, and not the OK 50 calls. You might assume that, and you'd be forgiven for doing so because we talk calls a lot here on the odd block, but not today. We're talking puts, in particular the OK 50 puts. When we profiled them this morning on the old mothership, theoptionsinsider.com, we saw paper coming in, gobbling them up to the tune of 8,500 contracts. For a range of prices. Looks like a lot of them for 52 cents. As we're looking now towards the end of the day, it's like another 3,000 or so, almost have gone up to the tune of a little over 11,000 contracts total on this strike. This is on open interest of just about 3,000 to 4,000 contracts. So some size open interest, but there's clearly more going up on this strike than is open. The early paper, the 8,500 lot, went up in one block. This is not an earnings play. Earnings come after October expiration. So this is looking like a straight up size downside spec. Usually if you're an underlying holder, you're going to buy through earnings. You're going to probably buy a little bit longer and trade that way. So this very near term, very near the strike, pre-earnings type spec looks like someone betting pretty hard that there's some downside to come here in VLO. That your take as well, Mr. Rock Lobster? Did you notice perhaps any large blocks of stock going up with said puts?
No, it's just, an awful, there's this big block of puts, and then there was and then let's say just kind of small follow-up volume after that. And, this is kind of, you're reminding me of some volume we saw like last week in some of those select ETFs where traders were buying just those out of the money puts about a month out. I didn't see any underlying go up or a buy right marker on this one, but it had kind of that strange quality where maybe they were buying stock with these puts, but Valero just those energy stocks just got kind of hit recently. The refiners, they've clawed back quite a bit. I think Valero traded right down to 47 and change or something like that about a month ago. It's come back quite a bit. Again, strange purchase for me with, when oil prices were going down, generally that was better for the refiners. So again, this is a little bit of a strange purchase, very, very spec on that put purchase. So I can't quite but obviously they think Valero's going back down to the lows of, or midsummer. And that's all I can say on this one. So definitely it's an aggressive buy, especially, prior to earnings like that.
Yeah, that's some pretty serious size, expecting a very substantial move to occur pre-earnings, which is always an interesting bet in and of itself. A lot of weird bets going up in the energy sector these days as oil doing all sorts of crazy stuff as the Ukraine and the Middle East continue to add turmoil to that product, and all of the resulting manufacturers and distributors and producers and refiners have all sorts of weird paper cooking as a result. We'll keep an eye on this one, though, because this is very sizable, very near term, so it should be pretty easy to see relatively quickly how this is working out for them. So file that in the to-be-watched category, listeners, as we move on to our next one. This is a newcomer, still in the same vein as our previous name. This is Pattern Energy Group, Inc., ticker symbol PEGI, P-E-G-I. Closing today, $32.75, up about 1% or so on the day. This is the name that does... Oh, I was just joking about a name that does 200 contracts a day. This is a name that does about 200 contracts a day, doing 6,000 today, so some substantial paper. Lighten up the old tape. In particular, it looks like the bulk of that came in one sizable roll up and out. Not just an out, but an up and out this time. We've seen some funky rolls of late, but this one seems like it's more straightforward, but he's taken some of the house money and running with it to the tune of 1 by 2. In particular, we saw 2,000 of the SEP 30 calls going up this morning, paper buying for $3, and then they turned around and sold 4,000 of the D's 35 calls for $1.50. So this is someone actually who had been, looks like open interest, of course, before I even get to that. This is open interest on the 30s, 3,500 and change, and pretty much zero on the D's 35. So clearly this guy is rolling his existing open interest, or at least a substantial portion of it. Looks like he probably was actually an overwriter, and these movements of late in PEGI maybe shaking him out, or maybe he had a higher level and he's taking some of those profits off the table and rolling it back in at a higher strike here in good old PEGI. Looking at recent performance, this was trading back in the 34 level as high as recently, I should say, as June, and then getting into July, PEGI has kind of been on a bit of a down swell, then has bounced off a low of about the 30 handle. So it's been in a bit of a range of late, 30 to 34. It'll be interesting to see how this guy's bet plays out towards the end of the year. But Andrew, this kind of also gets back to what we were talking about earlier, I think with the listener question last week, of people going a little bit farther afield and putting some size behind some of their overwrites when they find the opportunities.
Yes, I mean, this particular one, I think the guy actually bought in his SEPs, and he actually, I think, got long the D's 35s. So they're looking for a little more upside in here.
Oh, so he closed out a short and then went long twice as much the other side?
Long.
Oh,
yes, twice as much.
Talk about unusual activity, listener. That would certainly qualify. I looked at it, and my initial glance was just close out one buy the other two.
Well, yeah. He closed his SEP 30s for 3 to sell, and then he loaded up and bought the D's 35s. So I'm thinking, he scooped them with PEGI around the 30 handle. We had the run up. He's selling out his 30s, and he's buying, twice as many again on the roll. So, but that's what the paper did look like to me when he was doing it. So just straight up looking for, and this is what's funny is this is a wind power company. It's a company it's harnessing the mighty wind, and I think there's a pretty good amount of speculation in this, at least in the stock for sure. It's not a small bet to take your dollars like that and roll them up, although it's a lot more house money than before. But it looks, I think it looks like a reasonable trade, and looking for that rally all the way up and out to December.
There you go, listeners. A Tusaw-esque time 1 by 2 stupid. Buying SEP and buying D's. You don't see those too often here.
I'm loving it.
Tusaw. I knew I would invoke you with that, but don't go too far, Uncle Mike, because I think you might want to comment on this next one as well. We're going to close out the odd block today with a name a few of you may have encountered once or twice in your trading lives. It might be familiar to perhaps one or two of you out there. I believe it's called Apple. I may be mistaken on that pronunciation. It's kind of written a little bit strangely. This is the name, of course, that is pretty much the lion's share of every brokerage house's ADV of going back to time immemorial, or at least the better part of the last decade or the last 5 years or so, and certainly post iPhone. And this name, of course, averaging close to 1 million shares, a million contracts, I should say, a day. I see a number that high, I instantly think shares, not even contracts. It's so ludicrously high. Doing about 780,000 today, which in and of itself is kind of odd, given the fact that we alluded to earlier in the day that there is some potential news, some potential activity, some potential market and premium moving events coming up very soon in Apple land, and yet people not really playing en masse the way you usually would see them going into a pretty sizable announcement. Maybe that reflects the nature of the fact that Apple's kind of a sieve these days post Steve Jobs. They can't really keep a lock on any secrets. So maybe that's playing into it a little bit. Everything's already kind of been played out in the marketplace. But c'est la vie, interesting stuff. And there's, of course, with 1 million contracts or anywhere close to it, there's just paper on every strike. You can't really pull a narrative from that. But what you can do is pull out some trades that are kind of interesting. And what we saw today was some longer-term paper. In particular, looking on out to way out, beyond January, beyond Jan, all the way out to April. In particular, in the April, and you got to bear with me, listeners, because these strikes are pretty funky post-split. It was the April 117.14 calls, paper buying 8,500 times for $2.28, and then they turned around and flipped twice as many, 17,000, of the April 127.14 calls. So essentially a bullish 1x2 call spread going up for a net debit of 20 cents. Before we get into your rundown, Mr. Rock Lobster, Uncle Mike, I would like to know your, as the representative Apple zealot of the group, what's your take here on this pretty long-term, pretty bullish and optimistic 1x2 here in Apple?
Well, it's bullish from the standpoint that if you own stock along with it, or you plan on holding it to a point to where it would continue to be bullish. And I don't have it up on my screen right now, but a lot of times with a 1x2, it can start out as a bearish trade based on deltas alone. I doubt that's the case right now, but I like trades from this is because if you can combine it with something else such as owning the stock or perhaps another call, you're getting some pretty cheap deltas if you're patient and Apple cooperates. Now, if Apple were to go up to 120 tomorrow, then it's probably not going to work for you. And if you're bullish on it, because it would happen too fast. If you've ever felt the frustration of a covered call going in the money and getting called out too soon, or having it or not getting called out and still having to wait for that time decay to go away before you can move on to another trade, multiply that frustration by about 65 when you're doing a 1x2 trade, because that's the way with which it'll work. With that being said, I love being frustrated in situations like that because it means that I'm making my maximum profit just a little bit sooner. So I think this is a good way with which to get some pretty low-cost delta if you're patient enough to wait for the delta to be positive.
And of course, just on the flip side, you must love dealing with these ridiculous strikes. It must make your life so much easier these days.
Oh, it's just insanity. I can't wait until a couple years go by or whatever when we're done with these oddball strike prices.
You got a few years to go, unfortunately. Mr. Rock Lobster, take us home. What's your take on this 1x2 in Apple?
Yeah, like Mike was saying, I mean, the trade has the potential to make money when Apple really rallies, but you don't see the money for a while. It's kind of you're waiting for. I mean, it's a trade in 2016, and you're basically waiting for your money till 2016. So, unless you have some long stock against it, it's just going to take a long time for the position to perform. However, by getting a price anywhere close to the short strike for the little tiny 20-cent debit, obviously it had margin. But the return on that money, even the return on the margin is pretty good if you get that move you're looking for. So again, not a badly constructed trade. I generally don't myself like doing an open leg trade way far out in the future because that waiting for that volatility collapse, it might take a while to get that money in. Now, it could work with this one if we get enough of a drop in volatility after after the rollout of the new Apple product. So there might be just enough jazz in that position to make it work out. And obviously only the 20-cent debit means there's not a tremendous amount of risk for them on the downside. And, obviously the customer's not looking for a huge gap early. And in that case, it just might work out for them very well.
Yeah, I know you're not a big fan of having, net short units to the upside, but it is possible this guy has some stock in his account too, in which case it is perhaps not as net short as it appears on the surface, and in which case it would be, I'm sure he would be, like Tusaw said, overjoyed to have the stock go up to that strike and have to deal with all those intended issues. Interesting stuff.
Yeah, he will be crying a river of green.
Yes,
so
exactly.
So
he won't be too upset. All right, and that's going to do it for the old odd block today. And now we're going to jump right on into everyone's favorite Monday segment. Yes, it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, you know what time it is. It's time for Uncle Mike to hold court and lay down some options, edumacation, and indeed some wisdom. And perhaps even a dash of insight on top of that. So, Uncle Mike, the floor is yours, sir. Where would you like to take us today for your options education journey?
It is the emotional roller coaster today with which I want to take us all on. I want to go through, to start with, good greed and bad greed. There is a such thing as good greed, and I'm going to just kind of give you an example a little bit outside the option trading world to start with. Let's say that I'm a beginning option trader, and I am looking for some type of options education in some way. And I stumble upon this company called, I forget what their name is. The Option Pit. Yeah, we'll use them as an example. And so let's say that I'm looking at them, and they have a lesser expensive course. And I'm thinking, okay, well, that's a good course, but I don't know if I'll quite get everything out of it. But I see that there's a more expensive course there. I know I'd get a lot out of that, but I have to pay a little bit more money for that. It's more hours, it's more time, but I don't know if I want to pay that much money for it, even though I do have the money to pay. Now, if that's the case, and you decide to go with the lesser expensive course when you've already committed to yourself to being a full-time serious option trader when you know you need the more expensive course, folks, that is an example of bad greed. You're trying to save a couple of bucks and hurt yourself, by saving a couple bucks, that's something that could potentially hurt you in the long run and cost you more money because of the dumb mistake that you're going to make that you could have learned not to make in the more expensive class. Now, with that being said, what's an example of good greed? Well, one thing that I like to look at is that, let's say that I'm looking for something that I really don't care about, like ketchup. If I'm going, granted, I do like Heinz, I guess, but nonetheless, if I'm going to the store and I'm looking for ketchup, I'm fine buying the generic brand of ketchup. I'm fine saving a couple dollars on my bottle of ketchup. I couldn't tell you the difference between Heinz and the generic brand. I like Heinz, but in all honesty, I couldn't tell you the difference between it. There's no nutritional benefit to buying the more expensive ketchup for me, so I'll buy the cheap ketchup. That's an example of good greed, in my opinion. Now, let's transform this into the option trading realm. Right now, there's times with which it's very difficult to be filled if you are trying to sell premium, as I am right now. I am trying to do what I like to refer to as being greedy in a good way, in that I'm trying to sell puts in this marketplace, but I'm waiting for a dip in the market. And the way with which Mr. Longo describes this market right now, of the SPY and SPX being close to the 2,200 mark, and it just won't go away, it just keeps staying there, it is driving me insane. And I put out orders almost every day to try and sell puts, but I have not gotten my fill yet, and it's been probably since the S&P has gone over the 2,000 mark that I've been trying to get into some type of short premium, and I have not gotten my wishes, by gosh. I'm waiting to get the right fill, and I'll be honest with you, folks, it is driving me insane right now. But I'm trying to do what's called being greedy in a good way. Reason being, if I'm not able to get the strike price and the fills with which I want on short puts as well as and or short put spreads, then I need to stay away from it. I think that it's too dangerous to get into something selling short premium if you're not going to get the fill with which you want. Now, what would be an example of good greed in the option marketplace to where I would be less apt to want to get my exact fill? Well, that would be when I would look to be a premium buyer. Reason being, let's just look at the numbers for a moment. If I'm selling premium, that's all the money it's possible for me to make. It's mathematically impossible for me to make more money on the trade because you have a defined reward when you're selling premium, whether it's a short put spread, call spread, whatever the case may be. If you're long premium, and I'm oversimplifying this just to kind of give us an idea of how this can work, because different situations have different meanings and different things with which to do. If I'm going to go long premium, then I have unlimited upside. I can make money all the way to $10 million on my call option and more. The sky is the limit. However, let's say that I lose, and it is possible to lose at trading now and then. We all know that. If I do lose on the trade, then I'm limited to how much I can lose by the amount of premium with which I bought. So if I were looking to be a premium buyer in this marketplace, then I'd probably be a little bit less greedy in terms of my fills, because an extra 20 or 30 cents can easily be made up for if I have such a bullish or such a bearish conviction on the long option with which I buy. However, if I'm selling an option, that extra 20 or 30 cents, that's going to eat away a decent chunk of the percentage of profit with which I'm looking to get on the option with which I am selling. So the lesson for the day, folks, is whether you are trading options, whether you are buying options education, buying options catch-up, whatever the case, or buying catch-up, whatever the case may be, make sure that you understand that there is a time to be greedy in a good way, and there's also a time to be greedy in a bad way. Now, let's say that we do get filled on the trade. I got my fill for whether I'm long premium or short premium. At what points do I like to be good greedy and bad greedy? Well, my general rule, if I am selling a spread, is that I like to get out of the trade when I can collect 80% of the potential profit. So for example, let's say that I sold a put spread or a call spread, whatever the case may be, for $1. As soon as I can get out of that spread and buy my way out for 20 cents, that's my general rule as to when I get out. Now, on the flip side, if I'm going long an option, which typically I don't do that, if I am going long options, I'll usually create a bull call spread or a diagonal spread or something along those lines. Typically at that point, what I will do is try to get probably 50 to 60% of a profit on the long option trade. And so with that being said, I think that it's important to have some general guidelines like that. On a short call or on a short option, I tend to be a little bit more of a cowardly lion, so to speak. Meaning, if let's go back to the example to where I sold a spread for $1. If I see that spread at 21 cents and it's Friday afternoon right before the weekend, that's a no-brainer to me. I'm getting out of that thing. I'm not going to go into the weekend for a penny. However, let's say that I am a penny below my profit target on a long option. Well, maybe for a penny I would, but let's say that I'm a little bit shy of my profit target on a long option, then yeah, I would probably let it ride for a little bit. And the reason with which I would let it ride is because of the fact that it has a limited risk built within it because it's a long option. So as you're going through this, take these words and apply them to your own trading in your own way, and enjoy yourself and don't eat too much ketchup.
There you go. You may be hungry for something with ketchup on it, maybe a nice burger or some fries, something like that. Now, so I'll have to run out to a burger shack after the show. So thank you for that, Uncle Mike. As we move on into, I know it's Monday, listeners, the Monday show, but we like to squeeze in a few questions, particularly because we got the big live show coming up at the end of the week, so we might have time for them. So let's get a few in now. We'll dive right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. You know what time it is. It's time for you guys to join us here on the old All-Star panel. Make your questions or comments heard. No shortage of ways for you guys to do just that. Surf on over to the mothership. Leave a question or a comment in the show notes there. You can also use the feedback form built into the website. I know a lot of you guys like to do that too. You can also find us on social media, twitter.com/options, facebook.com/theoptionsinsider. No matter what you're doing, maybe not on Twitter because it's a little bit shorter, but try to put question for the option block somewhere in the subject line so we know which show to route your question to. And of course, you can find us the old-fashioned way, questions@theoptionsinsider.com. If you have a hard time remembering all that, it's all baked in to the mobile app to make it easy for you guys to do just that. First up, we have a comment, actually. This is from one of our regular commenters here on the show, Mr. KaiserDog76. He loves the unusual activity we do. He follows along with a lot of it. He seems to trade a lot of it very actively. He wrote the other day, "Oh, that Granny Smith tasted sour today. I have to admit, I ditched my calls shortly after the open, and I'm very glad that I did." These are, of course, updates on a lot of the unusual activity that we talk about on the site. Got ugly for retail's favorite fruit. Netflix could not even hold gains after announcing streaming rights to the new Origins Batman TV show. I'm not even sure what that is, but sounds kind of interesting. He goes on about GoPro, Mobile Eye. He writes, "I'm even interested to see how H&R Block trades post-earnings. Morgan Stanley looks very interesting to me as well. And the Nat Gas export commodity play is looking juicy and unrealized. I had a good day, so I have no reason to be surly. I just thought some of you might enjoy my commentary. Thanks for everything you do, Mr. Longo. You and the fellow," he writes Rouge Scholars. I think he meant Rogue, but I'll take it. I'll be a Rouge Scholar today. "Are the dose of sanity this insane market's needs. P.S. I love the new show. Reminds me of some of my favorite old school comics, Strange Tales. Keep up the great work. I am loving all of it." Well, listeners, he's referring to the newest addition to our network where we get in some weird and wild stuff in the world of options. Check it out if you haven't done so already. So Mr. Andrew, sounds like we have at least one fan for all that stuff we've been doing over there. So that's good to know.
For all the oddballness, yes. We have one fan. We have
one fan. We do it all for one fan. But it is a very extensive fan. He wrote a very long comment here, listeners. I just gave you the salient bits, which are always fun to share for our friend Mr. KaiserDog. All right, and next up we have the real question here, one of the real questions. This one came straight for the Viceroy, so I won't even bother diving in. She wrote right to him. She wrote, "I want to set up," this one comes from Catherine, by the way, "I want to set up an options trading account for my son, who is 23 years old. And I want him to learn to trade options in a risk-managed way. I don't want him to know that he can use options for taking stupid risks." He's put in parentheses. "He'll probably figure that out on his own soon enough. I contacted the customer services people over there at my broker, which is indeed Options Express, to see how an account could be set up to achieve my goals, and was told that initially all he could do would be to buy puts and buy calls. Seriously? That's exactly what I don't want him to do. I want him to control his risk better than that and to learn to put on spreads from the get-go. Is there any way that my goal can be accomplished? Thanks, Kat." Well, Mr. Viceroy, this one came in for you, so I'll let you take the reins. What do you have to say here for our friend, Mrs. Kat?
So first of all, Mrs. Cat is right, and this is a frustration that I think many customers run into. Every brokerage house has to establish suitability levels, and at Options Express we have 5 of them. And I'll do a quick rehash. Level 0 doesn't even involve options. It's buying stocks, fixed income, or mutual funds. Level 1 is covered calls. Level 2 is buying puts or calls. Level 3 is the first level that allows debit spreads. So here's the challenge. As a new customer, we have no sense of your suitability to do this stuff. And that's the problem at a brokerage house. And let me emphasize that a lot of times when people get an answer that says, look, you're going to have to open the account, you're going to have to trade some stock in it, you're going to have to write some covered calls, you're not going to have to actually buy puts or calls, even though that is level 2. If you open the account, trade some stock in it, maybe trade some covered calls, and then call back after there's a little bit of history and ask for level 3 or level 4. Level 3 is debit spreads. Level 4 is credit spreads. I suspect if the account's got more than $5,000 in it, has a couple months of trading history, it will get approved to do some spread trading. But there is a challenge here, and I appreciate the frustration of how come I just can't open an account to do risk managed trading? And the answer is we have to establish suitability levels. Every brokerage house has to do it. And I'll throw some cold water on some of the other brokerage houses right now. Frequently, when customers get turned down at one shop, they immediately go out and regulatory shop. That means they look for another brokerage house that will let them, quote unquote, do when they want. And by all means, feel free to go ahead and do that. But I would be very careful about if somebody lets you do spread trades as a new customer, or someone lets you do spread trades with very limited margin. Have a clear picture on when they're going to liquidate and things of that nature. But it's definitely a challenge. Your frustration is well-deserved. Our creating frustration for you is well-deserved, but it's incumbent upon us to establish some suitability. So, you can't walk in with $2,000 and say, I want to start spread trading, or even more aggressively, I want to start trading totally naked. So, yep, I hear your frustration. We create some of it. Open the account, buy a stock, write a covered call, buy a stock. If you don't want to write a covered call, sit on it, and then call back when the account's been open for a little while and ask them to elevate your trading level. And I suspect it won't be a problem.
Yeah, great question, Miss Cat there. I love to see the ladies writing in, too. That's always nice. So many men. Not that men are a problem. We love to have the men writing in, too. Just nice to mix it up every now and then. And, of course, she's asking the right question. She's writing in, trying to get her son edumacated using options. And I agree with you, Alex. I can certainly understand her frustration at wanting to do all the right things and perhaps having some unintended roadblocks in her path. But sounds like she'll be able to clear those out pretty well in a few months in the lifespan of your son's trading account. Hopefully, if he's doing the right things, aren't going to be too damaging to him. So if he has to hold a little underlying, don't worry. We won't tell anybody. We won't hold it against him here. All right, great questions, everybody. Now it's time for us to keep on rolling right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, you know what that sound means. It's time for you guys to hear what we're watching for the rest of this week, and it is indeed a busy week. We have the big live show coming up on Thursday, but before we get to that, let's dive into what everyone's keeping an eye on for the rest of this trading week. Maybe perhaps you. Uncle Mike, we shall start with you. And don't you dare tell me TLT and the macro, because I'll just switch it to Alex then.
You might as well. Yeah, a couple things. Looking at, just not to steal anyone's thunder, but definitely looking at Apple. It's actually trading below 100. This is such a scary, awful, horrible day. I don't know how we can handle such a thing. I'm watching to see if Apple, if it makes another run at 100, if it will break through it again. Right now, I am short the 97 puts for this week on it, along with a hedge against it. So we'll see where that goes. The other thing with which I'm watching this week is gold. It continues to come down a little bit. I've had to roll down put spreads on that. And then, of course, with TLT, but I won't say that again. But, of course, watching 2000 on the SPX, want to see if we can actually break away from it. It's like watching paint dry, for crying out loud.
So we actually got some short puts on going into the big announcement. Rolling some dice there, sir. Interesting.
We're getting it done, by gosh.
I like it. I won't have to call you a degenerate premium buyer anymore.
You've called me worse.
That's true, I have. All right, and Mr. Viceroy, what are you watching for the rest of this week? I'm assuming it's some esoteric German long bond.
So I'm watching absolutely nothing macro. I've taken that whole screen off my computer, and no, the screen's still there. Watching Apple. Tomorrow's and it is interesting. The fact that there's all this sort of disinterest and yawning, all my years in the stock and options market, it's like when nobody cares, that's when you get the big move. So maybe an Apple surprise tomorrow and trade through some of these strikes. Was interesting the odd block, the 117, 127 trade. You try to put that together and say, well, is there some historical basis for it? And no, there isn't, because it's never been to that price. So it's clear that the world's eyes are on Apple. Macroeconomic events, things seem to have quieted down. The German bond can't resist. Traded about a 40 realized vol today based on yield. So there's still a little bit of a safe haven going on there. And watching VIX, any kind of move up to the 2010, 2015 on the S&P, and I think we're going to set historic lows on the new VIX. But other than that, we're waiting for the Apple announcement tomorrow.
All right, and Mr. Andrew, take us home. What are you watching for the rest of this week, sir?
Watching Apple, watching Yahoo. Really trying to see what can go on with those two. Apple, I think, is trading, Yahoo at least. It's like the company's all valued by Alibaba. And who knows how big that IPO might be. Is it going to be like the anti-Facebook that goes public for $100 billion plus market valuation and climbs, whereas Facebook had a hard time. So, and right now Yahoo's basically trading at the value of just a holding, and you get almost the whole company for almost nothing. So again, those are kind of the interesting stuff. All the other macro stuff, as far as geopolitical, seems to have really died down with the Ukraine settlement and all that. So the market just is kind of stuck. And, the next stop is earnings in October. So, maybe Alex is right. I haven't seen volatility really come down, especially now the VIX is pointing out to early October. Just nobody's really coming in and selling premium yet. You don't have that, I know it's hard for Tucson to get filled, but nobody's really coming in and hitting the bid and making it lower. So it's he can't seem to get anything off, but nobody's hitting the bid and making it go lower either. So, those are just a couple of things I'm looking at for this week besides the giant festival on Thursday at Benny's Chop House.
It will indeed be a giant festival. And you're right, it is odd that, we're glued to the strike. It's a premium seller's dream, and yet not so much. People aren't really racing out to do it. The levels aren't really that attractive. So it's kind of an interesting thing, because otherwise, you're right, people should be blasting away all day because we literally cannot budge from the 2,000 handle. But c'est la vie. We'll see what's going on. Speaking of what's coming on, Andrew just alluded to it. Coming up this week, listeners, the big live event. A lot of you guys have been asking, when are we going to do this again? I know it took us a while to get the location sorted out. I left it in the capable/dubious hands of one Mr. Mark Sebastian. So we'll see on Thursday exactly what we have waiting for us there. But it will be at Benny's Chop House at 4 p.m. Central. Listeners, I encourage you, if you're in the Chicago area, swing on by. It'll be fun. We can have some fun banter. We'll, of course, have a few beverages in us probably, so it'll make the show that much more lively. You can always ask us questions live right there. And if for some reason you can't make it to Chicago on Thursday, well, you can still participate. Send us a question. Send us an email. Send us a Facebook question, a tweet, whatever you want to do. But get it in before the show so we can kind of line them up. Maybe if we get a few of those, we'll have some sort of mega listener mail, listener block, including some live questions there at the old event as well. So I'm looking forward to that. We haven't done this in quite a while. It's always pretty fun. We have some special guests lined up, people who used to be on the show, all kinds of other fun stuff, people swinging by. So it should be pretty interesting. Again, 4 p.m. Central right here in Chicago at Benny's Chop House. I believe that is on Wabash. I don't have the exact address in front of me, but you can look it up, listeners, Benny's Chop House. And we'll see you there 4 p.m. till about roughly 6, or maybe how long we go. If people want to keep asking questions, and I know the last time we did this, we went for about 3 hours, so we'll see if perhaps we can clip it around 2, or perhaps we'll go even longer. Who knows? So join us there. We'd love to see you Thursday, 4 p.m. Central live. Not to tape, but live. All right, and now that the big exciting stuff is out of the way, what else is coming down the pike from you guys that may interest folks? Let's start with you, Alex. What's coming down the pike over there at OX?
Well, nothing nearly as exciting as the festival on Thursday, but I'll just showcase a couple of events. Tomorrow, the 9th, a rare evening webinar. I'm going to do a live iron butterflies, and I'm doing this for couple reasons. One reason is every time I do Idea Hub, which generates iron condors, credit put spreads, I get our international customers who gripe that it's not available to them. So tomorrow I'm going to do iron butterflies and iron condors live without the hub and show the evolution of the trade using the all-in-one trade ticket, teeing up the trade with a walk limit. So 8 p.m. Chicago time, and then I'll showcase two other events. On Friday the 12th, Nina will be back from her vacation. Nina's our director of online education. She's in Croatia vacationing with her family on the beach in Zagreb. So she'll be back, and on Friday she's going to do a trading platform and site tour. And then the next live event, for those of you in the Los Angeles area, Jimmy Rouzan and the crew will be in Marina del Rey for their three-quarter of a day live event on Saturday the 20th. If you can't make the live event, come to the site optionsexpress.com. The live events are simulcast, so you can have full participation, ask questions, interact with instructors and the crowd.
Sounds good, Mr. Alex. And Uncle Mike, what's coming down the pike over there at RCM?
What we're doing right now, we're excited about the big show coming up this Thursday. But in the meantime, we had a stash of new clients that came in. We got all their paperwork ready, and so now we're opening it up again. If you have $500 a month with which you're looking to invest in one way, shape, or form with someone who does stuff with options, feel free to give me a call personally at 312-212-3531 or send me an email at mtusaw@rcmam.com.
All right, and last but not least, Mr. Andrew is coming down the pike over there at the pit.
Oh, I'm going to be in, besides our Trader Summit this week for all our gold members and higher, I will be doing September 24th. Mark and I will be an intro to the VIX. So for all that stuff we talk about, the VIX and the vol products, we'll do an intro on how those products work on September 24th. That is free at 6:30. I myself will be at the Money Show talking about really the difference between a butterfly and an iron condor. Usually I think basically they're both short gamma trades, but both are actually sort of different in how they work. So I'll be talking about that for about an hour at the New York Stock Exchange at the Money Show. So pop on over there if you're a New Yorker and check me out. And lastly, on October 4th, we will be doing a class that will cost you the entire sum of $49, but we will start putting that information you learned on the 24th of September to work on how to structure volatility trades given, kind of certain market conditions. So we got actually a lot of stuff going on here the next month. I'm flying everywhere. Too much flying for a Mainer.
I'm sure you're dying to go back to your fishing hole and get some fishing done back in Maine, but that will have to wait. The options education will never rest, sir.
It will not.
All right, and on behalf of Andrew and Uncle Mike and the Viceroy and, of course, myself, I want to thank all of you out there for downloading, streaming, and subscribing to the show. Of course, for sending in such great questions. Keep them coming. If you're local or if you're going to be local on Thursday, we'd love to see you live there, 4 p.m., Benny's Chop House. I'll be there. Andrew will be there live. A rare in-person appearance for Andrew coming out of his hidey hole from Maine, his spider hole up there. Uncle Mike will be there. The Viceroy will be there, and as well as a few special guests I've been hitting at as well, so it should be pretty fun. Lots of beverages for us anyway. Lots of great user feedback opportunities, questions. You want to ask questions, now's your chance. And if you can't make it for whatever reason, like I said, shoot us an email, a Facebook question, a tweet, whatever you want to use, and get your questions in before the live show. Maybe we can do a big mail block / live question palooza there at the show on Friday. All right, and hopefully we can do a big mail block palooza at the live show there on Thursday. All right, and we'll see you then on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.